name is Ron Prescott with the ISU Extension Outreach, working as a retail specialist. The iRetail initiative brings together both students and ISU employees to deal with your retail questions within your community. Actually, the retail table analysis video that you're about to view is a result of those community efforts, so I hope you enjoy it. Thank you. This is a bit of a snapshot for Adair between fiscal year 2012 and fiscal year 2013, which would be in September. Real total taxable sales took a decrease of 13%. Number of reporting firms down 2. Population slight decrease, and average sales per firm was down 11%. Average sales per capita was down 13.2. The total taxable retail sales and number of reporting firms in Adair is as follows. And this is a 10-year average. So for real sales in fiscal year 2004, we had about 11 million in taxable sales, and in 2013 we had 12.4. This is coming off of 2011 and 12, which was substantially higher. Also on the reporting firm, your average is about 73.3, so that's keeping with the trend of the chart. Keeping in mind these are returns that are being reported. Some of them are reported on an annual basis or a quarterly basis. So we add up all the reporting firms, divide it by 4. So if you don't have exactly 72 reporting firms, it could be off 1 or 2. But we are seeing a decrease of a couple firms in Adair. This is the taxable retail sales per capita. So this is measuring up all the taxable sales and divided by your population. The red dash is actually Adair. The blue dash is state of Iowa. So you can see the 10-year trend, but you actually see quite a substantial increase in 2011 and 12, and then really your trend line returns in 2013 at 16,500 taxable sales per capita in Adair. This is the population trends for peer cities. Note the left-hand margin is 90 to 105. Sometimes people look at this chart and they think it's a lot worse than it really is. So we're from 2003 population to 2012, and it looks like we have about that 7% drop. And keeping in mind, I'll show you the peer group average here in a minute, but the red line is Adair and the blue dotted line is actually a peer group average. This is expected in actual sales per capita, and in the left-hand margin, those are dollars per capita. The blue box represents a 25 to 75% percentile, and this is what Adair would be expected to have. As you can see, what you actually have is in the red dash, and so here again we see this increase in 2011 and 2012, but you're substantially higher than what we would expect Adair to have. This is a table of per capita sales per your peer group. So this is kind of like the top 10 list. And Adair is 7 on the list. You have Elkader and Larchwood and some others, and some of those are explained by geographical position. But to be 7 out of 117 on your peer group is pretty remarkable. It's a pull factor comparison with your peer group. On the left-hand margin, break-even is 1, so this is a ratio of actually your taxable sales and your per capita ratio. And so above that you see 1.2 and 2.0, and below that 0.75 and 0.5. So you're being compared. In the table below you see the peer median is in a blue dash and Adair is in a red dot. And here again, you're above the break-even. So what this means is you're actually bringing people in from the outside into Adair. Whereas the peer median group in the blue dash is having a more difficult time. They're really serving their own communities, but they're really not pulling in from outside in that particular peer group. But you are. Your pull factor ratio is 1.54, which is more in keeping with the trend line in the past 10-year average. This is a chart of worker inflows and outflows for 2011. The blue arrow on the left-hand side, the 405, actually represents the employed in Adair, but they're living elsewhere. The circle of 25 is employed and living in Adair, and the red arrow, the 294, is living in Adair, but they're employed elsewhere. Many times in these peer groups, those arrows are inverted, meaning that we have fewer people employed in Adair and living elsewhere, and we have more people living in Adair and employed elsewhere. And so that's a pretty good factor to have. This is a neighboring community comparison of pure capital retail sales. In the number one position, you have Panora with a population of 1,120 with 22,953 as per capita sales. And then number two position, you have Adair with a population of 780 with 16,500 population sales. And you're pretty much neck and neck with Atlantic, and then just a little bit higher than Greenfield. But this gives you some idea of some of those neighboring communities and how you stack up in accordance with per capita sales. This is a peer group cities for 5 South, and I understand that the print is pretty small. You have to get pretty close to the screen, but there's about, I think I counted 117 communities. And one thing you can do is we have a program called First Impressions that actually allows you to go to a neighboring city to see kind of what they have compared to what Adair has. And so this will give you some ideas as far as your peer group comparison.